How do we evaluate the creditors turnover ratio? Well, let's take the example from the previous video, which was we calculated it as a ratio as a number of 8.0. So that's the more difficult one to interpret. So what that means is, in this case, the business always has, on average, $5,000 of creditors at any one time. So during the current period, on average, the business will pay those creditors back in full once, twice, 3 times, 4 times, all the way up to 8. So that's how we interpret the creditors turnover ratio. So obviously the more number of times per period, or the higher that figure is, the more frequently we're paying people off each period. The one that made the more sense was the the creditors turnover in days. So in this case it's 46 days. What does that mean? It means on average the business has $5,000 of creditors, and the average time to take those back is 46 days. We'll then have another $5,000 of creditors on average, and it takes 46 days to pay them back, and then 46 days for the next 5,000, and so on for the rest of the year. So looking at it, the ratio, if it was a ratio of 8 the last period, and this period it goes down to 5, that means the business went from paying its creditors in full 8 times last period to 5. We would say on face value that is a negative trend because we're paying our creditors back less frequently, and that might mean we're going to get fewer discounts from our creditors. We could also cause us to have a bad relationship, and remember, creditors are going to provide us with interest-free credit, so we don't want to get them upset. However, we could remember that it actually means we have got more money to spend on other things. So creditors aren't the only liability we have to pay. We might have a lot of bank loans, for example. So actually paying back creditors slower, as long as it's within our credit terms, might actually be a good thing because it keeps more cash within the business. If the ratio went up to 11, well, that means the business paid its creditors on average 11 times this period. We'd say that means we're paying creditors back more frequently. That's probably going to be good because we're going to get more discounts from our creditors, which will make our profit go up. And we'll have a very good relationship with our suppliers, and that means that they'll continue to sell to credit to us, and they might even give us bigger discounts in future. The one negative could be that we are keeping less cash within the business. If we're paying creditors back too frequently and well within our credit terms, maybe we could use the money on other things like paying back debts, taking out drawings, or paying any other expenses that are due. If the trend went from 46 days, so on average the business was paying creditors back every 46 days in full, and that went down to 28 days, that just means we're paying creditors faster, so we might get more discounts, which is a positive. We'll have a good relationship with suppliers. However, again, the business will be keeping less money within itself to pay some of its other requirements like bank loans, and it also creates more pressure to sell stock quickly. We're going to look at that in the next video. If I'm paying creditors back in 28 days, it better be, I need to be selling the stock and getting the money from debtors well within that time frame. Otherwise, I'm going to need to find the money from somewhere else. If creditors turnover went up to 67 days, which means on average amounts owing to creditors will be paid every 67 days, we'd say that's a bad trend because on average we're going to get fewer discounts if we're taking longer to pay. We'll have a bad relationship with our suppliers who might stop selling to us. But the good news could be that we are again keeping more money in the business to pay other expenses and bills, and there's less pressure to sell stock quickly. So now we don't have as much pressure to sell our stock and collect money from debtors. We've got at least 67 days before we're paying back our creditors. What is an acceptable time? Is 7 days, 14, 28, 90, and so on. Again, we can't give an exact number. It all depends on several things. So it could be what was it last reporting period. You could look at what was the management's budgeted expectations. We could look at the credit terms offered by our creditors and the size of creditors' accounts. So a large creditor who we owe millions of dollars and wants to do business with us in the future, we'll probably pay them back before, say, a smaller creditor who we're not going to use again. Looking at the first sort of benchmark we can look at, we can compare our creditors turnover with the result from last period. So if we achieve 57 days this period, is that a good result? Well, it all depends. If it went from 39 days last period to 57 this period, we'd say that's a negative. However, in that we're going to receive fewer discounts and creditors might be unhappy. Could be a positive though, because we're keeping more cash in the business for longer. If that 57 days occurred after we achieved 78 days the previous year, then we'd say that's a good result. and we're going to get some more discounts. On the negative side, we're keeping less cash in the business, which creates pressure to sell our stock quicker. If we try to interpret the ratio as a number and compare it to our budgeted figure, is 6.3 a good result? Well, it depends. If the budget was to achieve 9.1, we've had a disappointing result there. We haven't been able to turn over stock as frequently as we'd planned, and that means we're not going to, turn over creditors and pay them back as frequently as possible, and that means we'll miss out on discounts. We also might upset our creditors. The good news could be we're going to keep more cash within the business and have less pressure to sell stock quicker if we're paying back our creditors for that stock slower. But that 6.3 actually is a good result if the budget was to only achieve 3.9. We're taking less time to pay back creditors for discounts, and our creditors, the bad news, they're going to be happy, but the bad news would be that there's more pressure now to sell stock quickly and cash is leaving the business very fast. We can also compare it to our credit terms. So if we achieve 46 days as a creditor's turnover, is that a good result? Well, if our suppliers offer us 60-day terms, I guess we'd have to say yes, we're paying that within the time allowed by our suppliers on average, which is a good result. However, if our suppliers only offer us 21-day terms, we're going to say that's a negative. We're paying 25 days after, on average, suppliers are providing us with credit. So that's probably going to lead to a negative relationship with our creditors, and they might even stop selling to us.